chat which is going to expand on some of the things we talked about last week about how you can use Prodigio and Wizard Lab in order to create market scanners. Now, last week was pretty interesting. I talked about some linear regression. I tried to break it down using some vernacular language. We're going to kind of continue that talking about correlation, and I'll tie the two together. But first, I want to thank everybody for joining me today. We host these chats every week, every Wednesday at noon, and all of these chats are always archived on our website. So to get everybody oriented, if you're new to Prodigio Wizard Lab, we have a home on the web, which is www.prodigiorts.net. We post blog entries. We have a forum that you can use to communicate and develop strategies with other users with. Ask questions, etc. And we also have our video archive. All of these chats are recorded and they're posted by date and with the title under the video archive. So you can just go here, and all these chats, we post them as soon as we get them rendered, and you can find them right there. You can also find these chats on the Prodigio platform under the Learning Center. We always, if you scroll down, we always archive all of these chats according to time and whatever the discussion's about. So this is what we talked about last week. We talked about intelligent application of linear regression concepts with Wizard Lab. And although this is myself talking about this chat, this was a really good one. Not in terms of the presenter, but the presentation. The material is really good in this video, and I definitely recommend, if you missed this one, check this one out. It's very, very useful. Prodigio is a robotic trading platform. It is available exclusively by thinkorswim and TD Ameritrade, and what it allows you to do is it allows you to automate strategies using robotic trade execution. All of the strategies run completely server-side, so you are not subject to internet latency. All of the messages and communication as the scanning signals happen, they are sent directly to TOS, so you can take advantage of the backbone there in order to get better fills on robotic execution. The way that you use Prodigio Wizard Lab is, it's through Wizard Lab. You either create strategies using a simple 4-step drag and drop user interface to automate your strategy. No scripting required. This rule building concept is what we've created to replace the concept of scripting. And you drag and drop your logic together, build your strategy, you backtest it, and when you're ready, you deploy it. There's two modes of operation. There's RTS strategies and trade optics. RTS strategies allows you to select any strategy that you created for robotic trading. Once you select something for robotic trading, it will use the risk parameters in order to open trades and manage trades according to things such as buying power limits, maximum number of trades allowed per symbol, drawdown limits, etc. And it will robotically manage the trading under your portfolio, and you can always see your open and active orders in your order book, and working orders, filled orders, cancel orders, etc. Prodigio comes out of the box with many pre-built RTS strategies, and we're going to be developing some more, and we're going to be refining some of these in the near future. So keep an eye out for the changes that we make to the out-of-box RTS strategies. In addition, you can also, in Wizard Lab, elect to deploy to trade optics. What trade optics is it is your real-time trade idea generation signal queue. You deploy strategies to trade optics the same way that you deploy for robotic trading, and when the signals come in, let me collapse this up here, they will populate under the trade scan alerts in real time as the signals are scanned and found against your symbol list. That's Prodigio Wizard Lab in a nutshell, and today we're going to continue our conversation about how you can use Prodigio Wizard Lab as a scanner. And it's a very powerful way to scan logic on a large set of symbols in order to find trading opportunities, and use the simple linking inside of Prodigio with TOS in order to get in and out of positions very rapidly. Now, Prodigio is linked directly to your thinkorswim trading account. If you're a TDA user, they're working on integrating those accounts, but right now it's a very simple process to just fund a thinkorswim trading account, and you can get started right away with the live money trading on Prodigio. And I recommend you do that even with a small amount of capital, because we don't have any more restrictions anymore. If anybody has been following Prodigio Wizard Lab for a while, we used to have kind of day trading and margining restrictions on the account, but now we've kind of unrestricted the robotic trading so that any account will be able to take advantage of the robotic potential of Prodigio. What that means is, if you don't have day trading status, then you only have so many number of trades that you can do in a day, and that's just managed by your Thinkorswim account. So it's completely consolidated with Thinkorswim. There's no more limits, and you're protected by margin, etc., etc. And for example, if you are using an IRA account, you won't be able to short positions, and that's blocked by the Thinkorswim account and Prodigio. So there's no problems there. So that's Prodigio in a nutshell. Another thing I wanted to mention is that I forgot to mention this before. We have a Twitter. That's twitter.com/wizardlab, and you can follow us on announcements that we make about the platform, about any releases that we have. We have an upcoming patch release which has one feature. This is a feature that a lot of people have been looking for. This feature will be right now, when you use Prodigio Wizard Lab, you need to select, and let me pull this up here, you need to select the RTS Auto Trading button in order to enable robotic trading. When you click that button, all of your deployed strategies are now allowed to trade on the account. In other words, this is like a lock on the account. It has to be green in order for the Prodigio robotic system to place automated trades. And I can toggle this back and forth. You notice I disabled it, so the button's red. It says RTS Auto Trading disabled. When it's enabled, it will allow robotic trading on the account. When it's disabled, it won't. We had a lot of users saying that they wanted the robotic system to scan the strategy, let's say over a week's period. They want to set it up on Sunday and they just want to let it go during the week. We have a feature now which allows you to, and we're working on this, it allows you to enable Prodigio robotic for trading and scanning for the whole week. Or I think it's basically based on an expiration timeout. So you'll be able to say, okay, run Prodigio for the next 3 days, run it for the next week, run it for the next month, etc. That'll make it easier to robotically scan, and you can kind of set it and forget it in order to take advantage of a very common cliche. Okay, and to get Prodigio, you have to request permission. On your Thinkorswim trading platform, there is a Prodigio icon. And in order to get that Prodigio icon, you need to send an email into support@thinkorswim.com. That's support@thinkorswim.com with the subject line Prodigio activation. Make sure you include your username and your account number. Okay, with all of that out of the way, we can get into the really interesting things that we were talking about last week. Now, I'm running off of the pre-production environment. This has a couple of the things that we're about to release. I'm not sure of the exact date of that release, but it's coming very soon, and so I wanted to take advantage of those. I'm running off the pre-production environment. This will make the backtest run a little smoother. On this next release, you'll notice the backtest will run a little smoother. If you are having latencies in the backtest, move over to the live system. The live system has many, many, many more resources than the paper trading system does. The paper trading system is really there as kind of like a trial system so that you can check it out, kick the tires. But if you really want to take advantage of backtesting and Prodigio Wizard Lab, please get onto the live system. Your backtest will run much, much more quickly. It'll save you a lot of time, and everything will just be a lot better for everybody. So check that out. And other than that, here's a scan that I did earlier, which is about the subject of today's chat. Today we're going to talk about correlation. And when I talked about linear regression last week, I really want you to understand the guts of what's going on. And the reason why I want you to understand this is quite simply because of the features that we're building for Prodigio Wizard Lab. We're working on a lot of things behind the scenes right now that you guys don't know about or haven't seen yet, and we're really excited about a lot of them. But it's really going to allow you to visualize these things that we're discussing exponentially better than you ever have been before using Prodigio. I always talk about running Prodigio backtest using the raw mode. And this is the backtest that I ran before. I have a strategy. It's named Corel Scan. Now, I'm going to talk about what this actually is, but I ran it on the S&P 100 in raw mode. When you run backtests, raw mode is an option that allows you to run your trading without a portfolio. All right, now why would you want to do that? Well, it basically assumes that you have an infinite amount of money. Right? So there's no buying power restrictions. It pretends that you've got an infinite amount of money. It will trade everything that it sees. One symbol at a time, mind you, but it'll trade everything that it sees. The reason why we have this, and the reason why we started with this as the first option when we first provided backtest, is because this allows you to see if the logic of your rules are firing at the times that you want. So when you work in Wizard Lab, you build the logic of your rules by dragging and dropping a series of inputs to outputs. It's a logical flow of data through the system, and I kind of touched on this a lot last week and even more the week before. But you think of rules in Wizard Lab as a flow of data through the system, much like electricity running through wires, much like water running through pipes. You have source data, and this is kind of your starting point, and as the source data trickles through the system, you run calculations on it. These calculations act as a series of filters, and ultimately it filters down to the point where you get a trading signal. Right? You could think of it as saying, if I was looking at QQQ, right, that's the ETF for the NASDAQ. It's the main ETF for it. If I was looking at QQQ, if I had a scan on that stock, which was completely open and had no filters on it, it would just trade QQQ all the time. It would say, okay, trade, 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 trade. But what you do in the rule builder in Wizard Lab is you have a progressive set of filters that keeps saying, okay, this is a condition, then this is a condition, then this is a condition, and that's a condition, etc., etc. And it narrows down what you're looking for to provide you the trading opportunity in the market. So it's a cascading series of filters, if you want to think of it that way. And that's a very good way to think about it. But what these scans are is how you control and compose these filters so that you get the signal that you're looking for. Last week we talked about linear regression, right? And I'm going to give a brief synopsis about what that was, because that really applies to what we're talking about today. So we're going to take advantage of some open source information. Right? The open source community is an extremely valuable resource available to all of us, and it touches all of our lives in many different ways, but here's a great example. So here is an article about linear regression. And as we talked yesterday, linear regression is nothing more than drawing a best fit red line, in this case, through a set of scattered data points. So you have some kind of phenomenon that you're trying to measure, right? And you can think of these blue points in this illustration right here of a linear regression. These blue points are your stock prices or your close prices of your OHLC bars. It's the semi-random behavior of the market, the bulls versus the bears fighting each other, causing the market to move, but there's some kind of fundamental relationship in all of this, which says one stock is relatively worth something and another stock is relatively worth something else. We talked about all of. Intuitively speaking, I'm looking at a chart of INTC, and if I eye this up, right now INTC is worth somewhere near $23. The movement is somewhat randomized. It's driven by market forces, but it's certainly not worth $300. I would not right now, and actually I'm in historical mode, so let me pull this out. I would not pay $300 for INTC stock right now, right? That's just nonsense, right? But why is it nonsense? It's nonsense because there's some kind of underlying relationship in all of economics and all of market momentum and movement, etc., that says INTC right now is worth somewhere around $23. Last week we used linear regressions to exploit some of these fundamental relationships. If I look at these closing prices, they move, but they more or less oscillate and revert back to means. That's why we looked at linear regression slopes, and the slope was oscillating above and below zero. It oscillates above zero when it's moving up, and it goes below zero, generally speaking, when it's moving down. Well, the reason why is because A linear regression slope is like constantly drawing this line through the data points. And as the data moves, this line will change. Right now in this illustration, this red line, this red linear regression, has a positive slope. It means the data is moving up. And if you just look at the blue data, it seems to be moving up. If you just eye that up, it does seem to be. Now if it starts to move down, this line will change its direction. It will become downward sloping. Downward sloping would mean the slope is negative, below zero. But fundamentally, all we were doing is drawing lines here. And the steepness of that line was a way of measuring whether or not something was moving up or moving down. And we used that as a filter. We used it as a filter in order to get a general momentum of a stock. And I believe we were using SPX and SPY last week. And let me just pull that up. In order to determine the general direction of SPX. This week is going to tie that together. It's going to explain why we did that. So let me put this drawing up. I was illustrating how you can put a horizontal line on the chart and how you can edit this so that it's perfect. It actually looks like I nailed it this time. It's hidden by this overlay here, but the value is 0. I'm going to right click on this drawing. I'm going to say extend left. I'm going to right click again. I'm going to configure it. And I was doing this last week for everybody who was watching. I'm going to make it a white dashed line, and wow, I pixel perfect hit that line. But you can change it. Sometimes you don't get it precise. I think I can actually, if I uncheck solid line, it's a dashed line. If I missed, see, I could say move, right? And I could like drag this up. And you see how this dragged it up to 1.95, right? And I just clicked off of it to unselect it. If I missed, I could right click and go to configure item, right? And it's saying, okay, my value is at 1.951. I could just change this to 0, change this to 0, both of those to 0, and it'll shift this back to where it belongs. We were measuring the general momentum of SPX in order to get a handle on, is the market moving up, is the market moving down? The reason why we did that is because this is a tool that allows you to bias your trading. And today I'm going to show you how this ties together with correlation so that you can make trades underneath the biased direction. So going back to our open source information, it's all about drawing lines, as I said before. Correlation is also all about drawing lines. Now the image that I want to talk about is this one right here, but without having to know, and I don't get into the math on this stuff. You know, a lot of people kind of find that boring. People like me find that very exciting, right? We have very strange things about what we think are exciting. But this is a really good pair of articles, because if I scroll down, you can see I'm on the linear regression article, right? And you see this image right here. They're actually talking about something which is called, well, they're talking about correlation coefficients and Pearson coefficients and all that kind of stuff. This image shows up in the correlation article. And if I scroll down far enough, you see this exact same image. Correlation and linearity. It really goes to demonstrate that correlation is just really another variation, in some sense, of linear regression. They're very fundamentally tied together. And I want to talk about, in general, what this is. Correlation is when you take two things and you compare them against one another. So linear regression, this is a generalized technique where you take a series of values along the x-axis and you compare them against a series of values along the y-axis. Well, in Wizard Lab, when we look at linear regression slope, we're always used to looking at these price charts, right? We're used to looking at SPX over a period of time. So our x-axis, that's the axis that runs along the bottom. Every time we look at a trading platform, we see time on our x-axis. And that makes a lot of sense, because we're interested in what the price was over a series of time. You know, we want to see the price moving over time. So it only makes sense to render time on our x-axis, and of course the y-axis has things that are interesting to us. In this case, price is something that's interesting to us. So our y-axis has all these prices. This is an index, so these actually aren't prices, but they're index values. So our x-axis has time, and our y-axis has price, more or less. What correlation does is it takes these values, it takes these SPX values on this x-axis, and instead of using time, it replaces the x-axis with something else. So in other words, what correlation does is if I correlate SPX to, I don't know, let's say AAPL, correlation takes these y-axis values and it transposes these along the y-axis. It takes these values, it plots them along the y-axis, and then if we go back to SPX, it takes the y-axis values of AAPL and it plots those against the y-axis values of SPX. What you end up getting is you end up getting a chart of the relationship of AAPL to SPX purely in the price dimension. Now we do take time into account, which I'll get into, but in other words, what you're doing is you're taking the exact same technique that you used in linear regression, and instead of putting time along the y-axis, you could think of this as being days, 10 days, 20 days, 30 days. Instead of doing that, we use SPX still on the y-axis, but now we're throwing down the AAPL values along the y-axis. So it says something like when SPX is at 15, whatever 15 means, maybe that's 1500, whatever. Then it says AAPL is at 50, and maybe 50 is $500, you know. It says when the SPX is at 10, AAPL is at maybe 32, etc. Now it's not going to look just like this perfect illustration here, but it's taking and measuring the relationship of A to B. But it uses the same or similar techniques in correlation. In other words, my point is you get a scatter plot where the one axis has the SPX values and the other axis has the AAPL values. Given this scatter plot, you can draw a line through it. The line that you draw through it, if you had taken SPX and AAPL, is the slope of that line is basically the correlation. Right now, it's not a perfect analogy. However, it's a highly accurate one. And what you end up getting is your scatter plots can look like a bunch of different things. And what this chart does, and this is a very nice illustration, this chart shows you what some of those things might look like. Right? And I can actually zoom in here to kind of give you a raw illustration. But the relationship can really be, ignore this bottom line, but take a look at this top line. This is the most interesting line. This relationship is going to look like possibly one of these top lines. If there's no relationship between the values between AAPL and SPX, in other words, if the market moves up in SPX and AAPL simply doesn't care, AAPL just does whatever it wants to do, the scatter plot that I described earlier is going to look like this. It's going to be all over the place. If there is no relationship, that scatter plot is going to be all over the place. Your correlation value will be 0 or near 0. In other words, it's saying, I have no relationship with SPX. There might be a bit of a relationship, which is why there's this 0.4 and negative 0.4. If that relationship says I move in the same direction, it's going to be, I don't know, maybe a positive 0.4. If I move strongly in the same direction, it might be 0.8. And you can think of these things as percents. So you can think of 0.4 as 40% and 0.8 as 80%. If it's identical, if it's exactly the same, if SPX moves up and AAPL moves up on command, if they move identical to one another, the correlation will be 100%. Now that will only happen if it's the exact same symbol, and it will be very, very, very close to 100% if it's an ETF based exactly on the index. In other words, let's take a look at here. I'm going to zoom out on the SPX over a long amount of time, and we had, let's see, a very bullish move starting in September over here, and it went just, you know, straight up with a couple dips and a couple oscillations, but it's going up and up and up, and that looks like maybe some kind of Elliott wave pattern, etc. Let me pull AAPL. right? Now notice what happened with AAPL. It too generally moved up, right? Now these are very interesting charts actually. And let me pull this up again. I've got AAPL over there, and let's pull SPX on here. Zoom out so that they're relatively the same. And you know what I'll do? I will take advantage of the layouts in Prodigio. In Prodigio, I can select Advanced Layout. Right? I'll say Continue. This is going to allow me to kind of like pin things, to dock things, etc. And I'm actually going to take this SPX chart, and I'm going to pin it to the right. So you see what happens? I get this gray outline as I move my cursor. I'm holding the mouse down. I let the mouse go, and I've got my SPX on the right-hand side. That allows me to compare the charts side by side. Right, so here I'm looking at September. Let me zoom in. Right, August, September 2010 moves up. Right, here's SPX. August, September 2010 generally moves up. Now look at the relationship here. It was AAPL was moving very similarly in the same direction as SPX. Up until about maybe February. And then at February you can begin to get a little critical, right? Because you see what happens with AAPL? It begins to kind of trail off. It's got some resistance here. It's generally in a downward channel. It might be breaking out of that channel, but this is what you need to ask Shadow Trader about, what their thoughts are on this. And you kind of have the opposite going on in SPX. This is kind of continuing the trend, although you never know, it's hitting resistance and perhaps this could be reversing. The point is, what correlation will do in this instance is it will say that during this time period, AAPL is extremely strongly correlated with SPX. But what happens is that correlation breaks down a little bit. Over the month of February up to the current date, that correlation is not so strong. And that relationship would have looked something more along the lines of this 80% correlated in the same direction, and in the last couple of months it would have dipped a little bit. I don't know what that's at exactly, but maybe that's at 70%, 65%. It's not as strongly correlated in the last months as it was during that time period. Correlation measures that relationship. And if you can anticipate the general direction of the market as bullish or bearish, you can cherry pick the stocks that are moving with the market, effectively hedging your risk, effectively allowing you to bias your trades in your favor, just like the casino analogy that I made last week. So that's what we're trying to do here. And I'll show you how to do this in Wizard Lab. And you'll probably laugh when you see how easy it is. Probably 90% of this presentation is going to be talking about it, and maybe 8% is going to be talking about how you actually do it. A couple other points about this chart is that you notice that sometimes you can be negatively correlated. That's known as an anti-correlation. This is very interesting, and you can build this into your scans. But to begin with, I'm going to focus mostly on these positive correlations. I said that 0 means there's no relationship. It means you basically have no intrinsic I move up, you move up, I move down, you move down relationship. An anti-correlation means that they're oppositely related. Well, what the heck would be anti-correlated? Let's change these charts for a little bit. I believe the symbol is QID. Yes, QID is the Ultra Shares Short. Right? And let's zoom in on more recent data. Let's pull up QID and let's pull up QQQ. And let's zoom in. So I'm looking at April to May. So I'm looking at a short time frame. And this may not be as immediately obvious. Right, but notice what generally tends to happen here. QID is an ETF which focuses on shorting the NASDAQ. Right, so their focus, they're an ETF, their interest is in shorting the NASDAQ. And you can ask somebody that knows more about this than I do, but basically it moves, if the NASDAQ moves up, QID moves down. If the NASDAQ moves down, QID moves up. And that makes sense, right? Because if QQQ was moving down, and if you were short QQQ during this time period, you would have made money. In other words, your investment would have been profitable. It would have went up. Then what happens is on the 19th here, right? It moves very strongly in the up direction. When that happens, if you were short, you would have lost money. So QID, it moves down. They move in a way that is intrinsically opposite to one another. That's known as an anti-correlation. When you have two things that move in exact opposite directions, they have a degree of anti-correlation, and that will show up as something which is like this negative 80%, negative 100% type of anti-correlation. So this is kind of a more sophisticated use of correlation. You can do it to kind of hedge concepts against one another. For example, a lot of you, are very educated about economics, and you know that, I don't know, when oil prices, when gas prices go up, consumer staple markets go down because of the cost of gas and these fundamental economic relationships, et cetera, et cetera. If you know these things, you can scan for these relationships by looking for anti-correlations. Right? So if you know oil is really tearing up right now in terms of price, maybe you can scan for anti-correlations in certain consumer staples or commodities. But regardless, the relationship is measurable, right? And we're going to demonstrate how we can exploit that. Right? So let me pull up SPX one more time. And let me pull up AAPL. And now I'm going to show you the Wizard Lab rule for how to do this. So I'm going to pin this off to the side. Right? And that's going to, my SPX chart's off on the side, and I can click here, and that's going to show me what SPX looks like. And why don't I just zoom out over that interesting time frame. And I'll go back into Wizard Lab. Right? Now here is the rule, which you guys saw earlier, but I'll show you how to do this. Now, if this is your first time using Wizard Lab or seeing Prodigio Wizard Lab, all I'm doing here is I'm going to my left-hand toolbox, which has all of my my studies inside of it, and I'm just selecting, I'm dragging these things out onto my canvas. I'm dragging them out, and I'm connecting outputs to inputs. So I'm taking some kind of output and I'm connecting it to an input. In other words, I'm just connecting the dots, really. And what this does is it defines how the flow of logic should run through the system. This will tell the engine that runs on the server what calculations to do and when to fire the signals based on logic. Right? And we have a lot of chats in the archives that talk about logic, because this is really what you're doing here is you are programming without programming. That's the beauty of it. You can define the logic and you don't have to know how to write a single line of code. So, and we're continually finding better and better ways to improve on this, to visualize it better, and offer more studies, etc. So let me explain what this rule says and does. I'm taking advantage of a source study known as single OHLC. Now, OHLC is probably the most commonly used source data used in the system. One of the exciting things that we're working on is we're working on new source studies. Things that you see such on the charts, such as Heikin-Ashi, etc. These are going to be considered source data. If you want to get a little technical, if you've really been following Wizard Lab for a while, something like a Heikin-Ashi could be considered an adapter. But we're going to offer it as a source data most likely. Eventually, we're going to build the adapters right into the study, so you won't have to connect them. But again, an adapter is something that allows you to process the data differently. One of the best examples is if you want the high price of an OHLC, you go down into your adapters. That's your adapters toolbox over here. You go down to high, and you connect OHLC into high, and that's just how you use the adapter to get the high price out of the OHLC. We're going to build that into the OHLCs, but that's how you use them. So anyway, getting back on topic, single OHLC will run the calculation on exactly one symbol. In this case, I'm looking at SPX, and this is necessary for correlation. What I'm doing is I'm saying always use SPX as input A to the correlation study. Right? And then I'm using a regular OHLC as input B to the correlation study. Now, before I talk about the correlation study, what's OHLC here? This is like a wild card. OHLC just says run the calculation on all of the OHLCs that I define in my symbol list. And a symbol list is nothing more than one of these lists that I set up and create, say either over on my quotes panel, or there's another shortcut which they'll show a lot on the Shatter Trader educational videos. There's another shortcut over here where you can kind of get the same editor. But I can, for example, I'm looking at my quotes, which is one that you get out of the box. If you hit this little edit gear on the right hand side, you'll get the symbol list editor. And what this allows you to do is define what symbols you want in your symbol list. And if I wanted to add any symbol, I just add it right in there, I hit save, and now I've edited my symbol list. But all of these symbols inside the symbol list, those are the ones that get processed by this wildcard study. The OHLC processes every single thing in my symbol list. So what I'm doing is, looking ahead, knowing that we're comparing things against the SPX, it's saying compare the SPX to all of the things in my symbol list. And it's going to give me on the other end signals based on how I want to scan this list of symbols. So the correlation study itself. Let's take a look at the definition of that. And let's see. It's very simple. It calculates the correlation between two sources. In other words, you want to watch this video, or do some research in order to know some of the guts of what it is. But it compares two against one another. This will run the correlation on two inputs, input A and input B. Input A we're defining to be SPX, and input B we're defining to be the wildcard. Now, correlation is run over a number of periods. In other words, we draw that line by sampling backwards 20 periods. And this is chronological, right? So it works the same way that a linear regression slope works. When I run this linear regression slope over the past 20 periods, let's see, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So then about another 10 brings you about to here. If I were to draw that line, let's see, it's actually a little bit negative right now. Since it's negative, that's going to look something like this. If I draw a trend line, it's going to look something like that. But that line was drawn by looking backwards over the last 20 data points. The correlation does the same thing. It's got a number of periods. It looks back, in this case, 20 periods in order to create this scatter plot. And it's going to use this scatter plot to give me a correlation value. That value will oscillate above and below 0, just like a linear regression slope. But it's not measuring momentum, it's measuring the relationship. Right? So remember, linear regression from the first chat measures the momentum. Correlation measures the relationship, the fundamental underlying relationship between the two stocks. And by fixing the one, I'm using a wildcard on the other, and that allows me to scan. And so it's going to say, over the past 20 periods, find out what correlation values are greater than or equal to this 0.8 or this positive 80%. And that's it. That's my correlation scanning rule. Right? It's as simple as that. It's very easy. We'll export this and we'll put it out on the blog, but it's really simple to use once you know how to use it. And that is the second part of your market scanner. Now I'll show you how to combine these together. And I might have to import the rule from last week. Oh, I could show you how to do that because, again, I'm running this on a pre-production environment to take advantage of some of the new features that we're releasing very soon. I'll show you how to import these rules by importing the linear regression rule back into here. Right? So anyway, we got this set up, and I ran a back test on the S&P 100, so this becomes my wild card. Right? So it's going to compare the SPX versus the S&P 100. It will find all correlations greater than 80% on the dailies over the past week, right? And it found these symbols, right? Now, I don't have an exit rule on this right now, so let's actually just add one really quick. Let's add an exit order, and I'll just put a simple stop at 0%, a simple target at 0%. And I want to show you, I believe we did this actually in this version. This is one of the cool things that we're, yeah. All right, take very close note of this. I want to take like 1 minute to talk about this new feature that we've gotten here. When you're creating strategies, strategies define how to trade using the signals that you build in the rule builder, right? So you've got stop orders and target orders. Now these are really cool because you can define percentage-based offsets, and the example kind of shows you how that's going to be. So if I'm going long on my correlation, if this was my strategy, I could put a stop order here, and the stop order should be below the entry price, right? So you see my example, it says, all right, suppose a position opens up at $50. Put the stop order to sell at $49.83. That's a negative 0.35% trailing stop offset. Well, before, see, these spinners are the same spinners that you can use for limit orders. And that's important on limit orders because you can like step in front of size and things like that. You can do cool stuff like that robotically, which is really cool. But for stop orders, it doesn't make sense to put a stop order above the entry price to manage a position. So we've blocked those in this new version, right? It just makes it much, much easier to use. It prevents you from making an accidental mistake. And see, for a target order, that one's got to be above it. It has to be. So if I go long at 50.01, my target should be above 50.01. Otherwise, it doesn't make sense to have a target order, right? So we limit that. And not only that, right? So this one has to be negative, this one has to be positive, and you'll feel it right away. But if I change this to a short strategy, it's going to flip it. So see, I'm going short, which means my stop should be above my entry price, and my target should be below it. And toggling this from buy to sell, you see this negative sign? It goes from, we'll make them, let's make them 1%. So you can see a little better. I know you guys already see this by now. You're all pretty sharp guys and gals there. But, you know, I go long. See, I'm negative 1% and a positive 1%. I flip this to short, and here you go. Flips it around to positive 1%, negative 1%. So that's something pretty cool. It's small, it's subtle, but it prevents you from making a mistake. So that's something that's built in now. It's really cool. But I just want to put these at 0 because, again, I'm raw mode trading. I really just want to see what signals I actually get, and I'll run this again. And every day that I've got a correlation on the stock greater than 80%, that's going to show up in this list. Right? And they're kind of moot positions, so net P&L should be all 0. Right? It saved my short side, but it doesn't matter. Let's sort these by symbol. Right? And you'll notice that a lot of the same symbols repeat. That's because the correlation is strong. And here's INTC. Well, we looked at INTC before. Let's look at something that we didn't look at before. Okay, COST shows up a lot. Right, so let's, oh, I missed it. Let's chart that one. Right, now over the past 20 periods, this relationship should be strongly related to the relationship on the SPX. Let me unpin this here so that I can see them side by side. And I'm looking at, let's make my ranges the same, right? This is 414. I want to zoom in to 414 here. And look at these charts. When the S&P moves up, Costco is moving up. And it pivots, it changes direction right here on the 29th. And that's a day late, right? But it's only 1 day late. It's not like it's 10 days late, right? You see, when it moves up, it's moving up. When this moves down, this is moving down. When this moves up, it's moving up. It's, you know, here's the sergeant and here's the corporal. You know, like it's saying jump and Costco is saying how high. That's beautiful. That's a very exploitable thing that you can take advantage of. And Prodigio lets you scan for these things. Right? Let's look at another example. I go into Wizard Lab and let me pin this back. Right? EXC's showing up a lot. Right? And I'm picking stocks that I didn't see before because I want to show how you can find these things and you don't have to spend hours and hours and hours trying to look for them. This one is not as pretty, but you can see this curvature. Especially, I've got, what, a 9-period moving average here? Let me put a 9-period moving average over here, actually. Right? Defaults to 20. Let me change this to 9. Right? And see these curves? Very similar. I can make these thicker. Right? I can do the same thing over here. Let's see, standard indicators. Right? I want to thicken my line width. And these curves are very, very, very similar. Right? They're not exact, but I'm not asking for exact. I'm asking for an 80% relationship. If they move together, generally 80% the same, that's what the correlation is telling me. And what I can do is I can tweak this. So watch this. I can be more restrictive. Now, this might not get any signals, right? I'm looking for something that's 95%. That might be way too much. But let's run it. Let's see what happens. I actually do get things that are 95% correlated. And look what they are, right? Dow. Chemical, right? No, I'm sorry. That's just Dow Chemical. Never mind. Caterpillar, right? These things have a 95% correlation in the last 20 days. And if I zoom in, I can see the curvature of this chart. Let me drop off the, well, I want to keep that linear regression slope, so let me put it on here actually. Linear regression slope, and we have 9 periods. And I'll put it up there, and I'll put these at about the same. Remember, the index SPX has no volume. Let's ignore volume for now. I'll pull up my chart settings, and I'll hide volume, because SPX has no volume. And let me pinch this down, move this down. And what you should see with a 95% correlation, look what's happening here. The price is moving in tandem with the SPX. The moving average is moving in tandem with the SPX. The linear regression slope is moving in tandem with the SPX. Everything's lining up. And if everything's lining up, you can bias your trading. And think about this. If you can get a general grasp on the overall direction of the SPX, you can do like an intraday or swing-based type of scalping system where if I know it's moving up, I can attempt to buy the lows. I can attempt to sell at the highs or short the highs. And what are the highs? Well, there's a really easy thing that you can do for that. You can put a Bollinger Band on there. That's going to give you a channel which will tell you, relatively speaking, I'm using 9s here, right? And this is at 2 up and 2 down. Let me make it a little less restrictive, 1.4, which I'm pretty sure 1.4 actually has a statistical significance. It's at the highs when it's above the upper Bollinger Band. It's at the lows, relatively speaking, when it's at or below the lower Bollinger Band. And relatively speaking, that's true. If you knew that this was a bullish trend and you found something that's strongly correlated, you know, even back here on the 18th, actually, well, according to these parameters, this linear regression slope of 9 is negative. But if you knew, based on this long-term channel, that you're in a relative uptrend because of the strong relationship with the SPX, you can buy all of these lows because they're breaching the lower Bollinger Band. You can buy all of these. You're biasing to say, I know that my broad market is very bullish. I know that I react to the broad market in the same way. And here's a relative low, a very short Bollinger Band. You know, prices dipping below. That's a buying opportunity in an uptrend. Go buy it. And you would have bought, you know, here and here and here and here, etc. You know, it's not going to be perfect. There's no holy grail trading system. But look at how you can leverage the robotic trading. You can have this get into positions, manage it. And boy, I mean, on Caterpillar here, I mean, you're going to be 80 to 90% accurate if you get this right. You know, now you gotta apply the intelligence. You know that I mean, hopefully, I'm giving you guys some ideas. You know, I have my own ideas. I've got a lot of ideas. If you want general information, you know, you can't beat the shadow trader. You know, so make sure you guys are tuning into that. You just can't beat those guys in terms of the analysis. But technically speaking, you know, which is the things that I kind of focus on, you can really harness some relationships here with some simple math. Right? Now, I also want to show you what happens if I lower this correlation, because you can use that to your advantage as well. And then I'm going to tie it all together in the last 10 minutes. Let's drop this down, right, to a 65% correlation. If I save that and I run this on backtest, I'll get a lot more results. And you see, I'm starting to see. Now, it's still 65%, but I'm getting a lot more. Actually, I was originally going to think 40, but I thought that was too low. Well, actually, I showed you that image before, right? I showed you this 40% correlation. There's a reason why they're showing you 40. There is still a lot of statistical significance in a 40% correlation. Even though it's relatively weak, in the stock market, there's still a lot of value in that, because if you're looking for like a Bollinger Band type of scalp strategy, the values will have to, by necessity, deviate from the trend in order to give you the trading opportunity, right? So 100% is never going to work. 80% is going to be very, very, very in line, but 40% might be a viable trading opportunity. So I want to just drop that down because I really wanted to show many more signals. I'm only doing it over a week, by the way, but let me drop this. So that's I actually zoomed in there by accident. 40%. Let's zoom reset here. Save it. Run my back test. I get a result set over the past week, and I've got a results. Not as many more as I was hoping to get, but at least I've got a lot of results. And again, I'm kind of on a pre-prod environment to kind of demo some of those new features like that one I just showed you. But what's happening in the case of Microsoft over the past 20 days? Let's pull that out. And this is looking at, let's see, I want to go like, relatively speaking, 20 days. I really want to go back 2 months because, well, maybe about a month, because I'm backtesting a week backwards. I'm getting all these signals here. So beginning of April, that's a good timeline. Let's zoom this into the beginning of April. And you see what's happening here. It's kind of moving in the same direction, but not really. Right? It's not completely anti-correlated or unrelated. You see these thick moving average lines. Here's the broad market, and here's Microsoft. It's kind of moving in the same direction, but not quite. And you can see the disparity in not only the moving average, but also the linear regression slope. And it's these relationships that you can tweak and refine and take advantage of. Right? And you can use the Prodigio trading system as a scanner in order to robotically get into high percentage trades, right? So now let's bring it all together. I'm going to go onto the website, right? So we're going to go back to www.prodigiorts.net, our home on the web, and I'm going to go to the last blog entry. This is a really old picture of me, by the way. I'll probably update it at some point. Here's the strategy from last week. Right, so let's pull this down. And notice I clicked on it. This is actually showing me the text of it. That's so you can send it in email and it won't get filtered out by virus scanners, etc. This is encrypted. But what I really want to do, and I always try to mention this in the little blurb that I mention about it. This is the SPX trend strategy that I created in last week's chat. If I right-click, I can say Save Link As, and I'm going to save this right into my documents here. I'm running a Windows machine. If I save that, what that'll allow me to do is I'll be able to go into my Prodigio. I can go into Wizard Lab, Step 2 Strategy Builder, and you'll notice if I hit Open, let's see, I've got a bunch of strategies in here, but I don't think I have the SPX trend. Yeah, I don't have SPX trend in here. So I'm going to go to Import, and I'm going to select this SPX trend strategy. And let's see, this is the one that I saved. If I hit Open, it'll give me a little dialog. Oh, name is null. Actually, that wasn't the one that I saved, but let's try to import this here. And it's telling me the name is null. Alright, so this has an error. Most likely this has something to do with my using it on pre-prod. Alright, so that's unfortunate. I can't import it for you, but in the production system, this will import this strategy in, and this will be a simple SPX trend. And just like Martha Stewart does, I do have it over here. Let's see here. So I can show you. Maybe I can just throw this together really quick. And one moment, right here. So I've got my production version, which has my SPX trend strategy in it. I go over into Step 1, the Rule Builder, and notice it's using this SPX trend rule. This is what I built last week. And SPX trend. Right? So there's a lot of moving parts to this one, but this is something that I refined in order to find kind of the general trend of the broad SPX than the standard deviation of that slope. So it's kind of like an internal Bollinger Band that we built into the linear regression slope. And also, we want it to be greater than a moving average, right? So that's where our AND operator comes in. And the resolution gets a little hazy when I two branches of logic, both A and B must be true. It must have a relative breakout in the linear regression slope, and it must be moving against its moving average. I also have an OR condition here. This OR condition, it's looking at another condition on the linear regression slope, right, where it's got to be below its standard deviation. Oh, all right. It's been a week since I looked at this one. The shot. So I'm back on my pre-production server. I'm going to try to import just the rule now, which I saved as SPX trend rule, and it doesn't like that either. All right, so I can't do it. But the idea here, actually I can build this in to my other system. Right, so this is like when Emerald tries to make a turkey, and the turkey is all like coming out charcoal, and he's like, oh, let's make that correlation rule in here. I'm a lot funnier when I'm not being a math guy. Trust me. All right, so I'm actually just going to rebuild that rule because it's so easy to build the correlation rule. I'm going to just pull that out. And like I said, there might be trading opportunities on a lowly correlated stock, so I'll use a constant of 0.4. But I'll go to my technical analysis indicators. I'll pull out my correlation, which should be alphabetically up here in C. And I double clicked there, which is just a little shortcut to drop it right out into the upper left hand corner. And I'm saying, tell me when the correlation is greater than or equal to 0.4. So to get greater than or equal to, I'll go to my logical operators. I'll pull out the greater than or equal to. And here I'm dragging it this time. And when that happens, fire me the signal. Right, and so I will save this. And I'm also going to make sure to export this from the production system so that it works in your importing. So I'm going to save this once more as Corel scan. And I've already got one in here. I'm just going to overwrite it. But now, to tie them together, in my rules, I've got two different rules that I use as scans. Right, so I'm going to say new. That's going to open up, this is going to flush the canvas. I've got a brand new workspace for my rule builder, and I'm going to use this correlation scan in a master rule, a master scanning rule. I'm going to take that correlation scan, and I'm going to take this linear regression, this SPX trend, which I saved as SPX trend, and I pulled out two logical signals. The correlation will fire signals of yes, I'm true when the correlation meets my correlation parameter. The SPX trend will fire when I believe I have identified a bullish or bearish trend in the SPX. If these two things happen at the same time, I have a very powerful scanning system. And in order to represent that, it's a simple matter of joining them with an AND. That's all it is. So this part I will leave to you guys as an exercise to create the meta rule or the master rule. But last week's blog entry has the SPX trend rule. This week's blog entry will have the correlation scan rule. You can combine them together, and I can save this as something like SPX Corel scan. Right? And I'll put a note to myself. I'll say combines the SPX trend scan with the Corel scan rule. And I've got this new one here. I called this SPX Corel scan. It shows up here as another my rule, but I want to stop there, go into the strategy builder, right? And I've got some kind of SPX trend end. You can put any kind of management that you want, but what this is going to do is it's going to trade the stocks now. Instead of using SPX trend, I will use the SPX Corel scan. And this is going to be really sweet. I've just created a scanning system. I can save this as SPX trend Corel scan strategy. And this is now a scanning system that I can deploy to RTS trading. And I'll just deploy that right now. Probably won't get any signals right off the bat, but you never know. And I can say start scanning the S&P 100. And now it's deployed and it's scanning robotically. I can turn RTS trading on and that's scanning robotically. I can go into trade optics, right? And I'm getting a bunch of signals on some of my earlier Bollinger Band ones that were really used for illustrative purposes. But let me take those off. Let me take those off. And let me clear out the queue, right? I can clear this out. And like I said, oops, sorry. I most likely won't get any signals in the last couple minutes that we have in the chat here, but to deploy it, I just scroll up, SPX Trend Corel Scan Strategy, or whatever you want to name it. Go to the S&P 100, check it off, and I'm scanning. And now I'm scanning for the signals in real-time trade optics scans and in my portfolio. But again, you want to make sure that you tweak the parameters of this according to what makes sense. That's why we offer the raw mode backtesting. And again, I strongly encourage you to get on the live system. There's many more resources on live than in the paper money. If you're using paper money exclusively, you're not getting the full benefit of Prodigio. So, get into the live server, run the backtest in that live environment. They're much faster. And that's how I can create a linear regression / correlation-based scanning strategy using Prodigio. Extremely beneficial. If I want to tweak the parameters of either of these, all I have to do is go to open, and I can open up SPX trend, and I can just tweak these parameters. If I want to change these slope periods from 9 to something like 20, I can just change them in here. And yes, it's difficult. We're getting to it. We are working on parameterizing these into variables so that you can say x equals 9 and just plug in x for all these things. We're working on that. It's going to take us a little bit to get to that because of the projects that we're working on currently, but yes, we are working on that, definitely. I can tweak the parameters, and as soon as I save this, if I change this to 10 or whatever, as soon as I save that, well, it's going to undeploy from these scans, and if I hit OK, they're undeployed, right? And I got to go back and check these off again if I want them running. RTS strategies, I have to go back, I have to check that on again. Trade optics, I have to go back, I have to check this on again. But I've changed those immediately. I don't have to touch that master rule at all. And I'll do it one more time because I'd like to put it back. I don't have to touch that master rule at all. That's right here. That's just an aggregate. That's why this is so nice to kind of nest these rules together using the my rules. I can change this and the effect will immediately apply to the master rule. And that effect also immediately applies to the strategy, which of course will immediately apply to the backtest. But that's it. I'm going to export this Corel scan rule, and a lot of you are quick enough at this that you can just do this on your own in a minute anyway. But I'll export this, I'll put it out on the blog entry, and you can begin tweaking, refining, running backtests, and scanning for real-time trading opportunities. You'll want to use this as a scanner, or you'll want to use the techniques described in this video and the last video as scanning techniques. Pull this up. Combine this with your triggers that you've been working on. You guys have been working on strategies related to CCI and Fisher transform, which I took a look at that, by the way. We do have the correct Fisher transform definition in our values. This is why we're kind of working on these charting projects so that you can see them. Our values are the correct values according to the paper that Mr. Ehlers was so generous enough to publish several years ago. So that's kind of cool. But you got all these strategies, right? Use these as your triggers. Throw an AND condition where you put the master rule as an AND condition on your rule, right? And now you've got a biased trading strategy, right? So if you're scalping Bollinger Band moves, you're scalping Bollinger Band moves under the bias of a general broad market direction and only on stocks that are strongly correlated. So this is a really powerful technique. You can create some really powerful systems with this. And our mission as the development team of Prodigio and Wizard Lab is just to keep refining the system and creating more and more visualization tools. So I hope that this is helpful. I hope it gets you into the world of robotic trading. I hope this is your first time looking at the system. That it encourages you to get your feet wet and jump in there and run some back tests, etc., etc. But again, that's how you can use this as a scanning system. And so with that said, I'm going to wrap up today's chat today by saying follow us on Twitter. That's twitter.com/wizardlab. Get permission for Prodigio. If you don't have permission for the Prodigio system, send your email in to support@thinkorswim.com. Subject line Prodigio activation. Throw in your account number, your username, and they'll get you set up. And check us out, our home on the web. This is kind of the definition of what I would consider to be a recursive rule. The system will prevent you from doing things like writing infinite loops. It'll actually block you from doing that. But you can do this with signals. Oh, there's another point we're going to be working on for as another enhancement in the future. You can write rules that send signals into one another, just like I'm doing with this master rule. We're going to open this up to calculations, right? So you can create like a formula and you can send the numerical output from A into B, right? So from these my rules, they won't have to just be signals. You can also send numerical calculations into another rule. We're working on that. But that said, yeah, thanks everybody for joining me today. We'll wrap up today by saying, follow us, get activated, get trading on the live system. Remember, there's the back test is much better on the live system, and look for a lot of future enhancements. So I'll leave you with that, and great trading, everybody. This is Brian Wagner with Prodigio signing off, and I'll see you guys next week. Thanks, everybody. Take care.